Good evening, ladies and gentlemen. This is Clueless 8. This is the end of the day report for May 29th, 2014. Another spectacular finish to the day where many of our members and subscribers listened to my specific recommendations, exit entries, parameters that I post on the real-time service, as well as swing targets that I've posted for quite a few weeks now, and as recently as last week, which most of the targets have been met, some of them have been exceeded, and many of the members and subscribers have profited 50, 100, some cases 200% on their weekly options that were specifically mentioned on my real-time service. Saying all that, congratulations to all who have made money, and I believe that I will certainly do my best to help everyone navigate these very tricky markets. And that old saying goes, when it looks too easy, it's going to get real tough. So going forward, I can assure you that for bulls and bears alike, it will be one heck of a tricky market, and I think my guidance and forecast will be of utmost importance and very valuable to your trading profits and maintaining and building your portfolios. Saying all that, I'm going to cover quickly the indices and a few of the charts I'm going to highlight. Many of the charts are very extended short term, as we all know. I showed these charts a week ago, 10 days ago, 2 weeks ago, when they were pretty damn cheap, and now it's basically $13, $14, $19 type of moves every single day. So obviously at one point there's going to be a little bit of a rest. This is panicked buying by hedge fund managers, mutual funds who were completely underinvested when they were exposed to the downturn, and a significant amount of them were forced to sell because of institutional margin selling across the board, which culminated into the lows of I believe, what was it, May 15th, and you know, the market has basically bounced back tremendously. You know, this is pretty much the same old story, and it keeps on repeating itself. But like I'd love to say, what's the point of a 4, 6, 8, 10% correction if no one's there to buy it? Chasing the last 3 to 5% of a move is not my idea of making real money. Like I reminded everyone, the best time to take my recommendations and run with them is the time that you guys don't want to listen to me. Those are the times when I am in there suffering for a day or two, and then sitting back and enjoying the rewards of my discipline and pain, while the rest of the so-called trading community starts to catch up. So enough of that. Let's take a good look at the Dow Jones Industrial Average. Try to keep it very simple here. Here's a daily chart of the Dow Jones Industrial Average going back to November of 2012. This is a very clean chart. You see some clean tracks here. I've tried to draw this as what should I say, transparent as possible, so you can see it where we are. As you can clearly see, we are still on the lower band of this very wide 3-channel highway, if you want to look at it that way, triple channel. Okay, we were on the upper end of the channel till about the end of December 2013, and then we had the very sharp, ugly January correction, which culminated in the lows of the first week in February. Since then, we have been bouncing around on the lower channel. So if somebody basically comes to me and says, hey, you know, this market can't go any higher, then I'll simply show them this chart and tell them to decide on their own what might happen. Now, the possibilities are clean here. We have, I'm not going to go over this, you guys can see it yourself. We have lower Bollingers of 16,261. This is Bollinger and acceleration bands. So 16,271. And then we have the lower channel at 16,000. So 16,000 would be a good mark to say that, you know, that's where we could come down to. That's roughly about 700 points from here, which translates to about 100 S&P points. So can that happen? It sure happens, and I'll show you in the S&P chart. Then we can very easily go and test the low 1800s, which would be a terrific point to load up on this market. Well, depending on the macro global circumstances, and we'll make a determination. But technically speaking, this is the band we are traveling in right now. The upper end of the band is 17,000, which is only 300 points from here, and we could very well get there by the end of June. As I've explained to you, I believe that they're going to finish the second quarter, June 30th, 2014, with a very strong finish. After a sharp correction, consolidative type of correction, pullback, which I believe will happen by the middle of June. For some reason or the other, if you look at the dates, we tend to have corrections around the middle of the month. This one was this one started well, I'm sorry, April 15th was one, with the day that I started my service, and then the next one was on May 15th, or actually May 20th. So somewhere along the line, it seems like every month, once a month, we get a nice little pullback. Anyway, this is a very clear chart. Study it, see where we're going, and if we do get a really significant acceleration of macro global positive catalysts, one of them being the Eurozone doing the right thing, whatever that is, the tools they're going to employ to boost their economic growth, good news out of China, good news out of Japan, then the white swan attack would bring us into the upper half of this band on the Dow Jones band. In that case, we're basically looking, I know it's hard to believe, but I'm just showing you the different scenarios. Then we're looking north of 17,000 and trading between 17 and 18,000. In the meantime, we are stuck in this range here, and that's what we're going to go. So that's the chart of the Dow Jones Industrial Average. I'm going to move on to the next video and cover the S&P 500, the Russell 2000, the NASDAQ for tonight. Thank you.